Hi, and welcome back again to Big Time Options, Edges and Hedges. We'll be doing a quick, and I do mean quick, walkthrough from the Tuesday trade this week on Tesla, where it's marking up nicely over 3 days. And we always like to use that kind of fusion approach to look at trades, taking a look at the fundamentals, the technicals, and especially the IV analysis. Let's jump in and take a look. First, here was the IV analysis from the original trade on Tuesday. We noted that implied volatility basically getting pretty darn cheap, right? At the lowest level we have seen pretty much over the past year, now trading at 44, right? At the third percentile, which certainly is a very low level indeed. Valuations also getting pretty expensive here. Tesla over 1.5 trillion-dollar market cap, right? Price to sales at by far the highest level over the past 3 years. The last time it hit this, as we alluded to in the previous video, marked a significant top in Tesla. My kind of quick valuation metric, right? Assuming, more than the 2 million deliveries they're expecting next year, or 1.86, put it at 2 million, a nice beat for next year, right? With that 1.52 trillion market cap, valued every car at over $750,000 per car. Yeah, we talked about it last time on the video. Tesla does have other businesses, but certainly at the core, at least for the time being, it is a car company through and through. So shows you how rich the valuations there are on other metrics as well. We did a quick comparative, right, from back then till now. So the last time, as we alluded to, when the stock was at this kind of lofty price to sales multiple, stock was about 480, right? The 440 put, right, which is about 40 points out of the money, trading just under 17 bucks with 23 days to go. Fast forward to Tuesday with the stock roughly at the same price, 485, but the 450 put, right, which is less out of the money, obviously, only about 35 points out of the money with one less day to go, was trading only at 7 bucks, so less than half the price that it was trading at before when the stock was at a similar level. We also looked at a slightly different put, shorter time frame, only 16 days to go, right? 445 put, less out of the money as well. So this one, again, trading at a higher price simply because implied volatility over 70, now around 43. So that's set up for that trade where we simply wanted to go out, as I talked about on my Tuesday Schwab appearance, do a put calendar, buying the January 16th traditional 450 put. Hedging, we always like to usually put on a hedge, right? Find the edge, put on the hedge, selling the 450 put, paying a little bit over 5 bucks, actually about 5.19 was where the fill prices for the most part were. Fast forward to Friday, right? We can see that trade closed over 6 bucks, right? So certainly a very nice quick gain on the trade. So in around 520, right? Rounded up there, out around 605, rounded down there for the exit to make it more feasible. 85-cent gain or so. So a nice 16% gain for a 3-day holding period, right? And it really wasn't anything to do with IV reverting back higher, right? We can see here where IV was. It actually trickled a little bit lower, not egregiously so. It was under 43 on Tuesday, right, when we were on TV talking about it. Closed on Friday basically right around 41, so certainly dribbled lower, but that's a nice thing about buying basically trough, IV levels. You're not going to get killed on a, vol crush. If you're buying it up here, obviously vol can have a meaningful impact. So IV didn't help us out much. Valuation, price to sales, as we said, did finally creep down lower simply because the stock was dropping, right, going from, almost 17 up here, now approaching still a rather lofty 16, still at the highest level over the past year by far, right? We can see that the market cap now under 1.5 trillion. When we put the trade on, it was over 1.5 trillion. You can see the stock down on Friday about 10 points. So stock did drop from 485 to 475 as we expected, because we did talk about the technicals as well, right? We did show that the stock was getting a little bit overbought, finally weakening. We like that kind of reversal day, going back, right, where the stock tried to make a new fresh all-time high, failed to, and then reversed and closed lower. So that led us to think maybe this is running out of steam a little bit. Certainly that 500 level, when you look back to the last time it was this richly valued, a meaningful overhead now sort of scenario. So certainly trimming out of the some position right now, taking a little off the table for a nice gain of over 15% in a few days, I think makes a lot of sense. We have next week's to continue to hedge if need be. We'll see if Tesla, which I think still has at least to the 20-day moving average, right, which is why we structured it at the 450 level to go, if we can pick up even more profit. So taking a little bit off the table, leaving a little bit there now that we've taken some gains. Be aggressive with the remaining part makes a lot of sense. So until next time, as always, here's to good trading.